welcome to the deep dive. We've had some really interesting materials shared about Unilever buying Sir Kensington's.
Yeah, that was a fascinating one.
And what we really want to dig into today is the why. Why does a giant like Unilever go after a relatively smaller brand like that?
What's the underlying driver?
Exactly. It feels like it tells us something important about how consumer tastes are shifting.
Absolutely. And to really get that why, we're diving into some market research, specifically an article from Cognitive Market Research dated April 10th, 2025.
Okay.
Think of this as our fast track to grasping what made Sir Kensington so appealing to Unilever. The mission here is really to pull out those key insights.
Got it. Extract the core reasons and see what they reveal.
Okay.
Let's jump in. Sir Kensington's. They were doing well, but they weren't a Heinz, right?
No, not at all. Not in terms of sheer volume anyway.
Right.
But the article frames them as a challenger brand, and they had a really clear purpose.
Okay, but what was that purpose, and why was it so, significant?
Well, what's interesting is how they defined themselves. They weren't just slinging ketchup and mayo.
Right.
They were building a whole narrative around natural ingredients, a real commitment to sustainability, and just great storytelling.
The story aspect.
Yeah, and that really clicked, especially with millennials and Gen Z. The key insight wasn't just they like natural stuff. It was that these groups actively look for brands whose values match their own, and they'll often pay more for it.
So this focus on values was a huge differentiator then, especially for those younger demographics.
Precisely. The research pointed to their success in places like Whole Foods, Amazon, trendy cafes, places these consumers frequent.
Makes sense.
But it wasn't just being there. It was the loyalty they built, real loyalty, because of transparency, ethical sourcing, this kind of quirky, unique personality, and that kind of authentic connection. That's gold in today's market. It's something big, established brands sometimes struggle to create organically,
Yeah, absolutely. You're not just buying mayo, you're kind of buying into something.
Oh.
Okay, so Unilever, massive company, obviously doing their own research. What were their studies showing?
Right. Connecting this to the bigger picture.
Yeah.
Unilever's own research was definitely flagging a big trend, especially in places like the U.S. and Western Europe.
Okay.
A rising demand for what they called better-for-you food products.
And better for you.
Yeah.
That means more than just low fat, doesn't it, in this context?
Exactly. Their research used a broader definition. Yes, health aspects, but also things consumers increasingly care about: animal welfare, environmental responsibility, corporate ethics.
Oh, the whole package.
The whole package. And while, sure, the big legacy brands still moved huge volumes,
Of course.
Unilever's data showed these smaller, purpose-driven brands like Sir Kensington's were grabbing more and more attention and dollars from younger, often higher-income consumers, people valuing quality and, values.
So Sir Kensington's wasn't just a blip. It was like a signpost for a bigger market shift.
That's a great way to put it.
So how did their research zero in on Sir Kensington specifically? Why buy them instead of just, launching their own better-for-you ketchup?
Well, this is where the strategic foresight comes in. The research didn't just see them as niche. They actually called Sir Kensington's a cultural bellwether.
A cultural bellwether. Explain that.
Think of it like a brand whose early success points to where the broader market is going. Its early fans show you the future, in a way.
Okay, I get it.
Unilever did detailed segmentation studies, looked at attitudes, and found this significant chunk of the market, urban, health-conscious, maybe 25 to 40 years old, we are tuning out, disengaging from traditional brands that felt stale, lacked innovation, or just didn't seem to stand for anything beyond profit.
And Sir Kensington's felt authentic, different.
Yes, exactly. That quirky branding, the social impact stuff they did, the clean ingredient lists. It just hit the right notes with those groups. And Unilever's research, it wasn't just sales data. They looked at brand perception, how people felt about the packaging, engagement on social media.
So a much more holistic view, not just spreadsheets.
Absolutely. They did sentiment analysis on reviews, customer feedback, and it was consistently positive about product quality and the company's ethics.
Right.
But the real kicker, according to the article, Sir Kensington's had an unusually high trust score.
Trust. That's the key word again.
It really is. Unilever realized that buying that pre-built trust, that cultural relevance, it was way faster and probably more effective than trying to build it themselves within their existing structure.
That makes total sense. You can't just buy trust off the shelf unless you buy the company that has it. Okay, let's go deeper into that brand identity. What specifically did Sir Kensington's do to build that connection?
Well, the article puts it nicely. They weren't just selling condiments, they were selling a belief system.
A belief system in a bottle.
Kind of, I mean, the branding was unique. The fictional British mascot, the witty label copy.
Yeah, I remember that.
They focused on a food philosophy, not just price or volume.
So they created this personality,
Yeah,
a narrative people could connect with.
exactly right. And the research showed younger consumers increasingly see everything, even condiments, as part of their lifestyle, their values. Sir Kensington's gave them a personality that felt, relatable, but also a bit aspirational.
And it wasn't just smoke and mirrors, right? The products backed it up.
Oh, definitely. It wasn't just marketing fluff. They walk the talk. Ethical egg sourcing, all non-GMO ingredients. And then innovations like Fabonnaise.
Yes, the vegan mayo from chickpea water.
Exactly. Stuff like that really set them apart. And Unilever's research saw that the appeal wasn't just for strict vegans or health nuts.
Right.
Mainstream consumers were curious too, interested in reducing animal products or just trying cool new flavors.
So broad appeal, but still very targeted.
Precisely. That made them a really valuable asset, something that could fit into Unilever's world but also potentially expand it.
Okay, so Unilever spots this gem. Culturally relevant, trusted, great products. Now, how do you bring it into the fold? The article talks about the integration. How do they plan to do that without, killing the golden goose?
Yeah, that's always the danger, isn't it? And this is where the research seems to have really guided them intelligently. They understood that a huge part of Sir Kensington's appeal was its authenticity, its agility, its kind of outsider vibe compared to the giants.
Right, if it suddenly just felt like another Unilever brand.
Exactly. You risk alienating the core fans,
No.
the very people who made it attractive in the first place.
So what was the plan? Keep it separate.
Pretty much, yeah. The research suggested letting Sir Kensington's operate with a good deal of independence within the larger company.
But leverage Unilever's strengths.
That's the key part. Use Unilever's massive distribution network to get the products out to way more people.
Smart.
And the market research helped pinpoint where to focus first, those progressive urban areas in North America and Western Europe where demand was already showing.
So data-driven rollout. It sounds like a real balancing act, getting the scale without losing the soul.
That's a perfect way to describe it.
Yeah.
And they apparently even kept using consumer feedback to guide new product ideas, packaging, keeping that connection alive.
Interesting.
The whole approach was described as sort of a measured integration. Amplify it, don't absorb it, and dilute it.
This whole story, the acquisition,
Yeah.
it really does feel like a case study for modern business, doesn't it? What are the big lessons here for other companies?
Their article really positions it as a masterclass, actually. A masterclass in using market research for M&A.
Beyond just the financials.
Way beyond just sales figures and market share, Unilever used data to spot these deeper cultural shifts, consumer values changing, and got ahead of the curve.
So it wasn't just nice product, good fit.
No. The decision was weighted heavily by things like brand values, that consumer trust we talked about, and seeing the potential to scale without compromising what made it special.
So the takeaway for other businesses is,
Look beyond the balance sheet when you're scouting acquisitions. That's the big one. A brand might have smaller revenues now, but if it has intense customer engagement, a knack for innovation, and really aligns culturally with where consumers are heading,
it could be incredibly valuable long-term.
hugely valuable. In today's world, understanding the brand's story, its values, who its audience really is, and why they care, that's becoming just as critical as the sales numbers. Maybe more so.
It's investing in future relevance, not just current performance.
Exactly. And speaking of performance, here's a quick fast fact that puts their growth into perspective. By 2016, so before Unilever bought them, Sir Kensington's was seeing triple-digit annual growth.
Wow, triple digits.
Yeah. And they'd expanded into over 8,000 locations, retail, restaurants, cafes.
Okay, that's serious traction.
It really is. That kind of rapid expansion combined with everything else, the brand identity, the values, that's what put them squarely on Unilever's radar as they were looking to, well, future-proof their business with brands that matched where consumers were going.
That fast fact really highlights that they weren't just a tiny niche player anymore. Okay, let's wrap this up. If we boil it all down, what are the absolute core takeaways from this deep dive?
I think number one is that Unilever's move was deeply strategic, really driven by sharp market research. Research that saw this big shift towards values-driven, authentic, brands.
Right, the better for you trend in its broadest sense.
Exactly. And number two, the research highlighted the unique cultural capital Sir Kensington's had built. That incredibly high trust score wasn't just a number, it was a major asset.
Hmm.
So the acquisition wasn't just adding products, it was a calculated way to buy into evolving consumer desires and grab a brand with a real meaningful connection to an important audience.
And for our listeners, interested in getting smart insights quickly, this story really shows the power of understanding those deeper consumer trends and
Mhm.
seeing brand identity itself as a strategic asset beyond just the obvious metrics.
Definitely. Which brings us to maybe a final thought, something to chew on.
Okay.
In a world where values and authenticity seem to matter more and more, what other brands out there, maybe ones that seem kind of niche right now, actually hold huge strategic value for bigger companies?
That's a great question.
And what kind of research, maybe even new kinds of research, could actually uncover those hidden gems before everyone else sees them? It makes you think about the whole future of consumer goods and what it really takes to build a successful brand today.